This is the Asia Trade. I'm Paul Allen in Sydney.
And I'm Haidi Stroud-Watts. The top stories this hour. Asian stocks are set for gains while US futures rise as the EU says it's fast-tracking tariff talks to avoid a transatlantic trade war. The dollar hovering near two-year lows.
Beijing considering a new Made in China plan to tighten its grip on global high-tech manufacturing, even as President Trump pushes for more factories in the US.
And I'm Avril Hong at the ASEAN Summit in Kuala Lumpur, where China's premier is pushing for closer cooperation with Southeast Asia amid the Trump trade war. We'll speak live with Malaysian Minister for Trade, Zafrul Aziz, and later to the CIMB CEO for the group, Novan Amiruddin.
Ahead of all of that, let's get you straight to how we're setting up when it comes to major markets around the region. And of course, it is still all about trade. There's potential, a little bit of optimism when it comes to the fast tracking of EU-US trade talks. Still not benefiting the dollar very much in some other assets either, but we are seeing US equity futures getting a bit of a bump. This is a picture when it comes to the setup here in Asia, though. Japanese futures up by just about 1.8% there, pretty close to 2% higher when it comes to that trading in Chicago. We're also seeing Sydney futures up by about 0.25%. Dollar yen, they're sitting at that 142 level. We see that sustained weakness when it comes to the greenback at the moment. Also watching the reaction when it comes to dollar China in this sort of new strategic plan that we're hearing about from Beijing. The other thing we're watching, of course, is the RBNZ closer to home. They're set to make their 6th rate cut and potentially also signal more bias to even more supportive measures. They're expected to cut rates by 25 basis points today to 3.25%. Further easing is expected to be signalled, and that's going to really, Paul, come down to the US trade barriers and broader uncertainty when it comes to the global economic outlook.
Let's take a look at how US futures are shaping up. Of course, there was no trade in the US for the public holidays, so we're still calculating the change from the Friday close here. Currently pointing higher. There is a little bit of optimism about at the moment. The big event we're counting down to this week for equities, at least, is Nvidia. Earnings due out Wednesday US time. That is, of course, a bellwether for growth stocks and the AI story more broadly. We will have cash trading resuming in bonds today when Japan opens a little bit later. We'll be getting Fed's preferred inflation gauge, the PCE data, at the end of the week as well. That's seen ticking up a little. Just a word on the oil price, continuing to soften a little. Momentum's really building now towards this idea of a July output increase from OPEC Plus to punish production sheets. That decision now rescheduled to May 31. No reason for that other than a scheduling conflict, Heidi.
Well, Paul, as we've been saying, one of our top stories, the European Union agreeing to accelerate tariff negotiations with the US after securing an extension for the deal deadline from President Trump. At the same time, top trade officials from the EU and China are preparing to hold their own meeting early next month. Let's bring our Bloomberg News editor John Haidi here, now China correspondent Min Lo with us. And John, we've had so much to and fro when it comes to the the temperature of the rhetoric between the US and EU over the past sort of 3 or 4 days. What are we hearing now?
Well, on this Memorial Day, President Trump had a call with Ursula von der Leyen, the European Commission president, and it seems like a less confrontational approach is taking shape on the part of the EU. And that prompted President Trump a little later to say that he was holding off on the tariffs against Europe, against the EU, until July 9th. So that gives a reprieve. It's good news. It's for investors, for the Europeans certainly, and for companies. But the talks, as up to now, have been have had very little progress. The Europeans say that they don't really know, even after since April, what the Americans really want. The U.S., the Trump administration, complains that European regulations and lawsuits unfairly single out American companies. So much needs to be done, but it is certainly a respite and a stepping back from a trade confrontation.
And Min, on the trade front, EU and China officials are expected to meet on the sidelines of the WTO conference in early June. What are the areas of potential cooperation here? And do both sides need to be mindful that any agreement they reach is almost certainly going to attract an opinion from the US?
Yes, for sure, because the meeting coming in early June is coming just ahead of that July 9th deadline that Trump has imposed on EU, potentially raising tariffs on EU goods from 20 to 50%. And of course, July is also the time when we know European officials are planning to make a visit to China. So this meeting between Chinese Commerce Minister Wang Wentao and his counterpart in the EU in Paris could likely maybe set the path for potential deliverables that both sides hope to see during the visit of European leaders to Beijing. And it will be interesting to see whether there will be anything concrete, whether it is picking up talks of this investment pact that has been put on hold for many years, or perhaps reducing tariffs on Chinese EVs in exchange for price commitments from Chinese companies. We know that China has been making ongoing efforts to shore up its ties with other countries beyond the U.S. And of course, it just shows that both sides have been increasingly willing to increase engagements with each other. China had recently lifted some sanctions on EU officials as well. Whether or not there will be something concrete we will hear from that, I think it's still a big question.
Tell us more about this so-called sort of made in China plan, because we know that even as we get through this détente between the US and China, Beijing is very much still pursuing its own strategic longer-term opportunities here.
Yeah, so the Made in China plan, Made in China 2025 plan, obviously is coming to an end this year, and policymakers are looking at the next iteration of that for the next decade, and that's likely to continue to be focused on the production of high-tech goods, especially when it comes to things like chip-making gears, especially given the curbs from the U.S. and how that has constituted a sort of national security threat to China. And here you can see it shows how China continues to plan to keep manufacturing as an important part in terms of its share of GDP to around 40%, 30 to 40% or so. They plan to keep that stable, according to what sources are telling us. And that is despite calls from the U.S. to rebalance the economy, and despite policymakers themselves acknowledging the need to spur consumption. There has been ongoing debate in the Chinese government right now whether or not to put a target on consumption as a share of Chinese GDP in the next 5-year plan that will be unveiled in March next year during the 2 sessions. But our understanding from sources is that policymakers are leaning towards no for the moment. There are still concerns about whether they have enough policy tools to actually spur consumption, and there's still this consensus that manufacturing is the way to go. The Made in China plan has been successful so far. The DeepSeek breakthrough really also reassured policymakers that it's a right decision to go with, because manufacturing has been able to be a big contributor to growth and to job creation as well.
John, just want to get the latest updates on the Russia-Ukraine situation as well. President Trump describing Russian President Putin as, and I quote, crazy. Is the colourful language, though, likely to result in any actual pressure?
He said he may pursue further sanctions on Russia. That remains to be seen. It certainly highlights President Trump's frustration over his inability to bring about an end to this conflict, and also throws into sharp relief the apparent lack of interest on the part of President Putin to pursue a ceasefire, let alone an end to this war that began, of course, in February of 2022. There have been attacks, missiles, drones by Russia on Ukraine in the last few days that have been caused a great deal of damage and at least 12 deaths. So certainly President Trump is increasingly frustrated. Now, what he'll do, so far, he's put very little pressure on President Putin to bring, to end the war or end the combat, or at least express some, to move toward some sort of resolution. So that we'll have to see. But it certainly demonstrates the prestige of the office and the great sway of the United States means that a president has enormous power and influence, but it's finite.
And as you know, the sort of perceived foot dragging continues when it comes to the ceasefire. We're seeing Ukraine's allies kind of removing these range limits on the weapons they're allowed to use to strike deeper into Russia, right? We heard that from Germany, but it seems to be representative of the approach being taken by the UK, by France, and by the Americans.
It's a remarkable moment, not just because this gives President Zelensky the authority, the freedom to pursue attacks deeper inside Russia as these assaults by Russia on Ukraine have intensified in recent days. But it represents Chancellor Merz and Germany stepping forward as a leader, even as President Trump and the United States have shown at best reluctance to play the role that Joe Biden did in the first years of the war. Does this mean that Europe is going to be the substitute for the United States, provide the aid and assistance and clout that will be needed to care for the Ukrainians to carry on the war? We'll have to see. President Zelensky will be meeting in Germany with Mr. Merz on Wednesday. So, as I said, it's a moment where Europe seems to be stepping up, even as the United States is stepping back.
All right, Bloomberg News editor John Harney and our China correspondent Min Min Lo there. China's Premier Li Qiang says China is aiming to strengthen cooperation with Southeast Asian and Gulf nations as he meets with leaders at the ASEAN summit in Malaysia. Bloomberg's Avril Hong is there in Kuala Lumpur for us. And Avril, China really looking to build some bridges here with Gulf countries, with ASEAN nations as well. But particularly with the latter, there's some challenges here regards some of these disputed sea boundaries around the South China Sea.
Yeah, Paul, I mean, I'm on the second day at the ASEAN Summit here in Kuala Lumpur. The big event, as you alluded to, is that ASEAN GCC China Summit. The first time a trilat of this nature is taking place. And Li Qiang, according to state media, Xinhua, has already been talking about how China is looking to bolster, strengthen cooperation, communication with these with these GCC ASEAN countries. And on top of that, about how China is really looking forward to, giving positive contributions to upholding the interests of the global South. So against this backdrop, this is really a sign of the times. I'd just like to highlight first that up until late yesterday, we weren't quite sure who the Chinese premier was bringing along with him as part of the Chinese delegation. But our reporter George Xiao spotted the Chinese Commerce Minister Wang Wentao along with the PBOC Governor Pang Gongsheng as part of his entourage. So a strong lineup from the Chinese delegation, and perhaps also showcasing China's commitment to the region. Now, we also heard from the ASEAN China Center Secretary General Shi Zhongjun about the possible areas of cooperation. Take a listen.
By leveraging these synergies, the three parties can improve supply chains resilience, like cross-regional industrial parks, infrastructure connectivity, like ports, railways, smart cities, and trade facilitation through harmonized standards and digital customs systems. Looking forward, the three sides can continue to actively expand cooperation in emerging areas. In the area of green economy, China's leading technology and innovation in renewable and clean energy can immensely support ASEAN and GCC's transition.
Now, Paul, to your point about those challenges, this is only the second time that we're seeing ASEAN with GCC actually meeting, the first one being from last year. Now they're kind of incorporating China into the mix. So you gotta wonder, does this departure from a bilateral setting make things a bit trickier in terms of agenda setting as well as achievable outcomes?
Avril, we're also seeing Emmanuel Macron in the region as well, and really trying to shore up these ties across various sectors with Vietnam.
Yeah, I mean, just yesterday we were talking about how energy, transport could be areas of competition or cooperation. And today we're hearing that defense is part of that because they have signed a couple of framework agreements when it comes to defense projects. France is also pledging to help the high-speed rail sector in Vietnam. So all in, it's seen as closer ties between France and Vietnam, and all this coming in the face of these potential risks to their exports given Trump's tariffs. And of course, following on from Vietnam, the French leader heads on to Indonesia and Singapore, and he's yet another leader that's making a multi-stop tour of Southeast Asia. Of course, we've been seeing this from the Chinese, Spanish, as well as Japanese leaders as well. So really here, Southeast Asia is in the spotlight and of importance as countries try to shore up their supply chains at a time like this and their alliances.
Bloomberg's April Hong at the ASEAN Summit in Kuala Lumpur. We do have much more coming up from the Leaders Summit there in the coming hour. We'll be joined by Malaysia's Industry and Trade Minister, Zafar Aziz, to talk about the prospect of trade talks with the US. And later, CIMB Group CEO Novan Amarudin tells us how the lender is navigating these tariff-induced volatilities.
Coming up on the Asia Trade, we ask Japanese shipping giant MOL how the trade tensions are impacting their outlook. TenCap tells us why they think stocks can continue to climb a wall of worry. Plus, Australia's Productivity Commission explains where reform is needed to boost efficiency and raise living standards. Much more ahead. This is Bloomberg.
Moments of change can also be moments of opportunity. The ongoing changes create the opening for a global euro moment. And this is a prime opportunity for Europe to take greater control of its own destiny. But let's not fool ourselves. It is not a privilege that will be bestowed upon us.
ECB President Christine Lagarde on the opportunity that she sees to boost the common currency's profile. And of course, that is something that has been top of mind for a while. And it comes at a time when we're seeing that broader weakness when it comes to the dollar. The question is, how high will we see that euro rise against the greenback, particularly in the backdrop of some recent kind of economic data strength, surprising to the upside for the region. This is a picture across some of the other FX pairs that we're watching at the moment. Let's bring Garfield Reynolds, who leads the Markets Live Asia coverage. So Garth, what do you make of this? Obviously, there's a lot else that has been trading in the US, but it's interesting the sentiment that's been expressed through the dollar.
Yes, very much so. In particular, there was a fair bit of puzzlement yesterday, both because of what happened, but also Donald Trump turned around and seemingly only moments, certainly as far as markets were concerned, after announcing the 50% tariffs on the EU, he then promptly suspended them. Equities are now, equity futures, US equity futures are now back above where they were before the Friday announcement. So they've welcomed this, as it were. Meanwhile, the dollar, it recovered a little bit later on yesterday, but it touched a fresh low since 2023, and sentiment towards it remains very poor. A lot of sort of both havens and risk proxies are gaining against the dollar almost in any circumstance. Outside of you get an occasional day where either something very obviously very dollar positive will occur, or it's simply more like a kind of a rebalancing, as it were, occurs. But otherwise, the skew is to the downside. One of the biggest gainers against the dollar yesterday was the Australian currency, and that's a risk proxy. It's also a currency that you would think would have struggles, because we just had the RBA last week not only cut rates as expected, but say, well, we actually thought about doing 50 basis points instead of 25 basis points. And markets are pricing a very strong chance for another cut in July, and they expect potentially 3 more cuts this year, by the end of this year. So that should be weakening the Australian dollar, but instead it's strong. And that tells you possibly even more than the very strong path for the euro and for the yen, that sentiment towards the US dollar just keeps on getting worse.
Yeah, and the US dollar seems to be coming under pressure from other areas as well. We're hearing that China's asking its major banks to promote the use of the yuan in cross-border transactions. What's the intent here, and are we going to see more of it?
Well, I mean, the intent from China is to boost the yuan's role in international markets, and that's been something it's been pushing for a long time. It makes a lot of sense too. And you think it's the world's second largest economy. It's the world's second biggest equity market by capitalization, especially if you include Hong Kong market in that, which after all Hong Kong is part of China. Then why is the yuan only used in a relatively small number of at least over-the-counter transactions? That has increased, but the latest survey, which was in 2022, that showed it went up to 7% of transactions from 4% of transactions. That still seems awfully low relative to its economic weight. And China was already interested in this before what happened in 2022 when the US's response to Russia's invasion of Ukraine involved essentially sequestering parts, pretty much all of Russia's foreign exchange reserves, like non-gold reserves. So that was an extra wake-up call to China that it wants to boost the role of the yuan so it's not so exposed through the currency channel to US domination. And in fact, the announcement about the 40% floor now versus the 25% floor is very interesting, given that there was some Federal Reserve research just the other week which showed that already about 40% of China's international lending and transactions were going on in yuan rather than in US dollars. So this is kind of a signal, I think, from the PBOC that it wants that share to keep on growing, and that aligns with what the ECB was talking about, the idea that there are advantages to having your currency be a bigger part of the international market.
All right, Garfield Reynolds, who leads our Market Live coverage, thanks for joining us. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how US futures are tracking. Of course, there's been no trade in the US because of a public holiday, so we've still got futures calculating from the Friday close, setting up for some pretty decent gains though when trading does resume. S&P E-minis better by about 1%. A couple of big events to watch out for coming up this week. Nvidia going to be reporting results, the Fed's preferred inflation gauge as well. More ahead on the Asia trade. This is Bloomberg.
Well, Japan's top trade negotiator says his team will not fixate on tariff talks the US is having with other nations. Akazawa, was speaking in Parliament after returning from a third round of negotiations in Washington. As bringing up Bloomberg senior editor Brian Fowler. So what's sort of the subtext of this? Because we've also heard that they want to have sort of the fundamentals of a deal in place by the time the G7 rolls around in June.
Yeah, Heidi, I think what Akazawa was trying to say is, on the one hand, Japan is definitely in communication with other countries and paying attention to the process as it looks for clues on what best action to take and what best approach to take. But he's also saying Japan won't be stampeded into a deal just because the U.S. seems to be doing these deals with other countries. Japan has stuck with its pledge to do the deal that's all in one, not a series of little deals, but everything that's complete that would include what it really needs to see, which is an exemption on the auto tariffs. And it's got a lot of things to offer. We've seen a few things come out in the news. Prime Minister Ishiba was talking over the weekend about Japan's ship expertise. And what he meant was that Japan could help repair U.S. warships that patrol the Pacific Ocean And also, Japan could help build icebreakers for the U.S., and that's become a big hot topic these days because of concerns about security in the Arctic region. So that's one of the things. And the other thing that's popped up is talk about contributing capital to the LNG pipeline project in Alaska, which would also include a pledge to buy more LNG from the U.S.
Brian, the cost of rice, obviously a major domestic issue in Japan at the moment, and we understand there's a plan to start selling rice stockpiles to get the prices under control. I mean, this looks like a short-term solution. Is it a bridge to a longer-term solution?
Well, it's definitely an attempt at a short-term solution because politicians have their eyes on the upper house election that we expect to happen probably in early to mid-July. But there's a lot going on here. Rice, of course, is not the only thing that is expensive these days. We had data last Friday showing that national consumer inflation has been at or above the BOJ's target for exactly 3 years. We'll get more data this Friday. Tokyo inflation, a leading indicator that will show inflation still way above the BOJ target in May. So there's a lot of frustration among households about soaring costs of living. Rice, of course, is kind of a symbol as the food staple, and prices for rice have doubled over the last year. So this plan to release 300,000 metric tons of rice, it's interesting. They tried to do this already with 200,000 metric tons that were auctioned to the farming communities and these cooperatives. For whatever reasons, that most of that rice did not make it to store shelves. Only 11% made it to the retail market. So now Japan is going to try to sell these rice reserves directly to retailers, and they're hoping to bypass any kind of log jams. But one of the key questions will be, I mean, what do the retailers do with the rice once they get it? The government can't tell the retailers what price to set on their store shelves. So one of the things we'll be watching is to see if retailers really pass on those savings that they've benefited from to the consumers.
All right, Bloomberg senior editor Brian Fowler there. Some other stories that we're following. Major power companies in Singapore, Malaysia and Vietnam have agreed to explore renewable energy links, especially wind power, across their borders. The agreement is seen as a critical step for the region to meet ambitious climate targets while supplying growing demand in sectors like AI and data centres. The pact was announced on the sidelines of the ASEAN summit in Kuala Lumpur. NATO Secretary-General Mark Rutte says the alliance will look to adopt a higher defence spending target of 5%, meeting a demand from President Trump that was once seen as unrealistic. The proposal includes a 3.5% target for hard defence spending and another 1.5% for related outlays. The Dutch government has said that Trump plans to attend a NATO summit next month in The Hague. Let's take a look at how commodities prices are tracking. We've seen gold retreating from record highs. This mainly around some of the encouraging news that President Trump has delivered around the extension of trade talks with the European Union. So that's seeing the gold price pulling back a little bit from those record highs. Crude prices, though, continuing to feel pressure. I mean, there's some encouragement on the demand side from that apparent détente on trade, but it's the supply side of things with the story continues to be. On May 31, OPEC Plus will hold a meeting to decide July production output increases. Seems almost certain that we are going to see a third consecutive increase as OPEC Plus doubles down on punishing those production cheats, Heidi.
Take a look at what we're watching here as we're just about, 25 minutes away from the start of cash trading in these Asian major markets across the region, including here in Sydney. We're up by about 0.2% when it comes to futures trading at the moment. Singapore Nikkei futures kind of reversing track. We're off by about 0.1%, and S&P futures looking a little bit more positive with, I guess, some of the positive narrative when it comes to the fast tracking of US-EU trade talks being proposed by the EU side. We're also watching the RBNZ as well. They're expected to cut to 3.25% in their meeting later on today and get to 2.75% according to the latest Bloomberg analyst surveyed by the end of the year. So more supportive measures are expected to be signalled today by the RBNZ. We'll also be watching shares of Meituan at the open in Hong Kong, the Chinese food delivery giant beating on earnings expectations, but also warning that profitability could take a hit from intensifying competition. Let's get more on this from our tech reporter, Annabelle Drewlers. So there was good news, but they are facing stiff competition here.
Yeah, that's right, and not just domestically, but also international markets. So Meituan is a company that very much has global ambitions, and we've already seen the start of that move into new international markets. For instance, trials in the Middle East, and you're seeing the app there really gaining increasing popularity. Also in Hong Kong, for instance, Kita, which has even managed to displace Deliveroo, which had been in the market here for 10 years. But on the earnings call last night, we heard from the CEO, Wong Jing, talking about exactly how they plan to move abroad. He's saying this is going to be a slow and steady push. They don't want to move too far too fast. But we do know Brazil is the next country that they're looking toward and planning to spend billions of dollars on that effort. Of course, the trade-off is that you do have some hit. They're saying there's going to be some impact to shorter-term profitability, and so they're actually expecting core local commerce operations to decelerate in the coming quarter, and also operating profit is going to take a hit. But they are saying that the pain in the short term will pay off in the longer term.
Yeah, despite all of that long-term risk, Meituan posted a sales beat for the latest quarter. What were the details of that?
Yeah, we actually saw the numbers coming in better than expected, both on sales and net income. So sales were up 18% to $12 billion. Net income as well coming in at $1.4 billion US. But again, and I don't want to hark on too much, but they do have a lot of challenges. We've just spoken about the international ones and how much money it's going to take to move abroad, but also domestically. We really saw that reflected yesterday in the session, because Meituan actually was one of the biggest laggards, dropping around 5%, but that was after regulators came out with some new draft guidelines. And just to get this briefly, or in a nutshell, essentially regulators in Beijing want more support for merchants that are selling on large online platforms like Meituan, like JD, like Alibaba's sites. And the concern is that the merchants are really bearing the brunt of this intense competition between the big guys. And again, that is really what led to that stock decline. Meituan year to date, you can see they're off around 15%.
Xiaomi is up next. What are we expecting?
Yeah, well, actually, just to make that comparison, I mean, Xiaomi is a stock that's done extremely well still this year. We had it doing well in the fourth quarter or second half of last year, but into this year as well, it's up around 50% so far or thereabouts. The earnings expectations for today, they're pretty high. So the company is expected to report around a 45% jump in revenue. What's going to be really interesting is actually to see the revenue breakdown, because we've seen the company's foray into new segments. EVs is one to watch in particular, and last week, for instance, we had the chairman and founder Lei Jun unveiling a new EV. This is going to be a new SUV, or their first ever SUV. Going to be interesting to see how much EVs are starting to contribute more and more to the bottom line, because if you take a look at the overall revenue, we're expecting around 110 billion yuan for the period of the first quarter. But when you take a look at the segments, smartphones are still expected to be more than 50%, but you see EVs as well there really catching up ground.
All right, Anna Belcher was there, our tech reporter. The latest now from the corporate front. Country Garden's push to win backing for a $14 billion offshore restructuring is running into resistance from lenders. The key group of banks says the Chinese developer hasn't yet agreed to demands related to the return of seized collateral, which would be a deal breaker. The bank creditors are vital to Country Garden's restructuring plans, as they can block any potential deal. BYD's sweeping price cuts of as much as 34% sent Chinese EV stocks tumbling in Hong Kong as concern grows over a renewed price war. In recent months, BYD has been working to clear older models from its inventory, including ones without its new driver assist features. The price cuts are expected to push BYD's rivals to also cut their prices, straining bottom lines. We have more ahead on the Asia trade. This is Bloomberg.
Our next guest runs Japanese marine transport firm Mitsui O.S.K. Lines, which owns the world's largest fleet of LNG carriers. The company says it expects a slowdown in seaborne cargo movements and greater difficulty buying Chinese-made ships due to the Trump administration's protectionist policies. Joining us now from Tokyo is President and CEO Takeshi Hashimoto. Takeshi, really great to have you with us, and I'm sure in every aspect, US politics and tariff policy is affecting your business. So let let me start off by asking you how the tariff war, these trade policies are playing out for what you're seeing at the moment and also the outlook.
Yeah, it's almost every day, every week the situation is changing. So as of today, I'm becoming relatively optimistic because that the most important issue was, of course, the tariff and the trade policies between the big countries like U.S., China, or U.S., EU, and it seems to me that still that lots of the bumpy situation is continuing, but at the end of the day, that the gradually that the situation will be stabilized. So. Compared to that, our estimation in early April, that today's sentiment is better. So that I'm relatively optimistic about the future the development of the global trade situation.
What about the situation when it comes to carrier orders from China?
Yeah, that the China the situation is very, very drastic. In April, we observed the dramatic decrease of the trade volume between China and the U.S. and quite big negative impact for our industry too. However, that after the agreement between China and the U.S. In early May, now we are observing the quite strong bounce back of the cargo movement. Therefore, that of course that this is the relatively temporary agreement, and we should see that what will be will happen that in coming 90 days. However, so far we are enjoying the very strong market situation in May. So that I really hope that at the end of the day that this the trade conflict can be settled down in a reasonably good way.
We have seen this trade conflict before, though, during the first Trump administration. Have you taken any lessons from that period that you can apply now?
Mm-hmm. Yeah, that the first Trump administration, the situation was a bit similar at the very early stage of the Trump government. That there are lots of the confused situation, but gradually that we could manage to adjust ourselves to the new market circumstances, and tariff war itself also that slowed down during the first administration of Mr. Trump. So I really hope that at the end of the day that everybody recognize that the necessity and importance to sustain the global economy and global trade, because it's a kind of the backbone of the people's life, and also that the production or of the industries or the supply chain. Therefore, that still a bit early to decide. However, that as of today, I'm relatively optimistic, and focusing that what's going on between the trade talk between Europe and the U.S. For coming few weeks time.
Mm-hmm. We've seen the yen strengthening a little bit lately. I'm wondering how a stronger yen has been impacting your business, and what your outlook for the yen is.
Yeah, that the unique aspect is that the quite high volatility of the market. As I mentioned, that the April market was dead, and May it's very strong and bouncing back. And the June, what will happen? It's a bit difficult to predict, to be honest. However, that we ourselves must be the very agile and the quickly adjusting our volume of the fleet size and capacity, and then try to maximize that our top line and improve the bottom line. So that is the quite exciting moment, but it is to some extent that the nature of the shipping industry that facing to the quite the volatile up and down of the market. How to adjust our position will be that key issue to survive under current technically quite difficult market. However, that not entirely that negative for our businesses.
Takeshi, how do you view the sort of environmental and energy policy side of things, both in terms of perhaps more stringent environmental policies, but also US energy policies and how that impacts decarbonized fuels?
Yeah, to be honest, we are quite exciting about the IRA in Biden government because it could accelerate the development of the alternative energies like the green methanol, green ammonia, or green methane, such kind of things. However, I must admit that for the time being that we should expect that kind of the setback or the speed down. However, in the long term, that the control and reduce the GHG from the shipping industry is a kind of the must. And so for the time being, that we will concentrate how to actually reduce the GHG from our fleet by utilizing the LNG or methanol and the available alternative fuels, which can reduce the 20%, 25%. Still, we cannot reach the net zero without the development of alternative energy like the green ammonia, green methanol. However, I must say that the time scale of these green transition will require a little bit longer than we originally expected. So for the time being, that we will concentrate to reduce our emission by utilizing the available alternative fuels. Particularly that the LNG is a very good thing. That there are lots of the new LNG projects are going to happen, and I really hope that the international price of the LNG will be more reasonable for us to maximize that utilization for ocean-going the shipping.
All right, Takeshi Hashimoto, CEO at Mitsui O.S.K. Lines, thank you so much for your time today. Still to come on the Asia trade, Seven & I shareholders expected to grant the company time to attempt a turnaround as it faces Couche-Tard's takeover bid. We'll have a look ahead to today's annual meeting next. This is Bloomberg.
Well, Seven & I shareholders meet in Tokyo today as a 7-Eleven operator attempts a radical overhaul to counter a $52 billion takeover proposal from Alimentation Couche-Tard. Let's bring our Asia health, retail and media reporter, Kanako Matsuyama. So looking at this sort of structure in terms of what we're expecting, how much of a grace period can we expect to see to try and stage this turnaround?
Well, hi, Heidi, in the morning. The company has been facing quite a drama for the last half a year or so with the Kushtar, but today's annual general meeting, it will be fairly low-key and going to be very, very smooth. There will not be any shareholder proposals, and the company will smoothly, the company has it will be only company's proposal. The advisory firm ISS is also recommending the shareholders to vote for the proposal, so it'll be fairly quiet. But I do think that this is only shareholders just waiting and see what's going to happen with all the restructuring plans that they've put forward in the past couple of months. The company has made a series of changes, such as management reshuffle, $2 trillion worth of buyback plans, selling underperforming assets, and also planning a U.S. business IPOs so that they can completely focus on the convenience store business. And at the same time, Kushtar is, and the companies also has signed an NDA with Kushtar so that it is showing that it's making a progress in terms of conversations for the deal. So far, they're actually waiting and watching and see. But we don't know how long that's going to continue.
Mm-hmm. Yep. All right. Bloomberg's Kanoko Matsuyama there. Also going to be the first meeting for the new CEO, Stephen Dacus, in charge there. Let's check in on some of the stocks to watch when trade opens in Australia, Korea and Japan shortly. Keep an eye on Nippon Steel. S&P Global Ratings saying that its acquisition of US Steel will severely pressure the Japanese company. Market opens in Japan, Korea and Australia up next. This is Bloomberg.
This is the Asia Trade. We come down to Asia's major market opens, and we're seeing some sort of more positive rhetoric from the EU, Paul, when it comes to wanting to accelerate these EU-US trade talks. But it's really interesting watching the market reaction now to this, can we call it a pattern of what President Trump has been doing, the attack, but then a fairly quick retreat.
Yeah, and you'd be bold to make any predictions about this as well, wouldn't you? Who knows where it's going to head yet, but, certainly the reprieve being taken a lot of encouragement from the market. We're seeing the gold price pull back and even some yields pulling back a little as well.
Yeah, we've seen certainly Japanese equities seeing that support from the reprieve or the retreat, if you will, and perhaps this notion that these are markets that have seen, most of the bulk of the lows, right, at least as the détente with China continues on foot. But take a look at what we're seeing as we head into the start of trading. Of course, when it comes to Japan, we've got the Nikkei 225 in the previous session, just seeing some supportive, pretty solid gains. That was a second day of a rally in the hopes of softer trade policies from President Trump. And of course, Japan's still working on its own more, presumably more comprehensive trade deal that they want to get in place by the time the G7 comes around in June. We're seeing a muted start when it comes to Japanese equities at the moment. The yen holding at 142.58. And of course, we've had quite a bit of downside when it comes to the dollar. Some of the sentiment there being expressed through the dollar, the vulnerability, particularly against trading in the euro in the most recent session there. Also watching yields there, the 40-year yield falling 10 basis points to 3.435 there. And it's been quite an interesting story when it comes to the pressure renewed with Japanese bonds. That 40-year sale in the next session coming after that sell-off. The Ministry of Finance looking to sell those 40-year Japanese government bonds. That will be a real test of appetite and demand, given how much of a decrease we've seen in investor appetite recently. We're also watching for any kind of extension there with the gains that we've seen with the BOJ's Governor Ueda's speech being watched as well. That's happening just at the top of this hour, so we'll be watching that very closely. Let's get over to the Korean markets, where we did see a little bit of upside when it comes to consumer sentiment. One gauge coming in above 100, so showing finally kind of being pulled out of contraction territory. So perhaps as a response to some of the not just geopolitical but domestic political volatilities easing somewhat. The Kospi, though, off by about 0.6%. Big day when it comes to China earnings, and that could see a bit more of an impact across tech stocks across the region. The Kosdaq there just treading water at the moment, Paul.
Well, we've just opened for trade here in Australia as well. Let's take a look at how we're going early on. It's, of course, a staggered open, but early we are seeing some positivity for a couple of the energy and commodities names. Boss Energy, Alcoa moving higher, but the broader index flat at the moment. Hard to get a read on things right now. But, of course, trading has resumed in US Treasuries as well. In Japan, we're seeing some of that pressure on yields easing somewhat. The yields for the 2 and the 10-year both nudging downwards ever so slightly. Not on that board, but the 30-year yield also moving lower. That is now 5.0258. The oil price, one to watch as well. I mean, there is a bit of optimism around the demand side with this, well, apparent extension, at least. Let's not call it a deal yet, between the EU and the US in terms of negotiating a trade deal. But hovering over that is the supply issue. OPEC Plus now holding its meeting on May the 31st, a little bit later due to a scheduling conflict, but the expectation is we're going to see another increase in output in the month of July. Well, let's get to our next guest now. Junbei Liu, lead portfolio manager at TANCAP, joins us right here in Sydney. Junbei, great to see you. We've got markets, as you observe, now off their lows that we saw after the Liberation Day fallout, but your volatility is still plenty of that. When you're looking around this market, is this a buying opportunity? Where are you seeing opportunities?
Look, we do see opportunities, and but some of them may have rallied quite aggressively. But we do believe in state investors. Some of the growth companies, I think, for the ones that doesn't get impacted by the trade and the tariff and the like, we do think they will continue to grind higher. But domestic, within Australia, we're actually seeing a lot of opportunity in the cyclicals where, our rate cut cycle has started, and then with many to come. And our cyclical has yet to improve, as with many other global ones. So we do see opportunities on that front. Resources is a front to the front, or commodities is a part where, we do think for tactically there is some upside, but we're just a little bit cautious of, in terms of China's growth, because right now economic data is pretty strong. However, into the second half, there might be some softness coming through.
Narado, you added risk after this 90-day pause was announced after tariffs. And I mean, that pause was announced, let's not forget the context. President Trump described the bond market as getting yippy. Do you have a degree of confidence that the market can at least dictate some of the terms around trade policy?
Look, I don't think so. I do think, look, I think that every party is, they're all incentivized to get the best trade deal. However, some of the gaps are very, very far away. So, it might take longer than that period. Particularly when you talk about the economy like US and China. I was just in Hong Kong last week and spoke to many strategists and investors on the ground. And the view is that the gap is too wide. It's going to take longer than 90 days for most of the policies. Now, the good thing is we will see what's happening with the first round of 90 days with the EU and other markets, what that might look like, whether it's extension or whether something else. So net, look, we think the significant downside for the market has been removed, but we do need some sort of certainty, and because we will see the corporates sort of pull back just based on, don't know what the policy look like.
Challenging time for central banks too. We're hearing from Governor Ueda at the moment of the BOJ saying Japan is really grappling with the challenge when it comes to the 2% inflation target. He's speaking at the Institute for Monetary and Economic Studies conference in Tokyo. So how much is this market sort of still focused on what central banks are doing? Clearly the Fed is still top of mind, and how much of it is really on these day-to-day news headlines?
Yeah, that's right. So the market is dealing with a lot at the moment. So central banks are essentially there to provide the floor. So should inflation get out of hand, should things become, or the growth outlook collapses, and the central bank will be there to support it. But right now, just doesn't look like it will be the case. U.S. economic activity still looks okay, but we know they're slowing, company pulling back guidance and the like, but they're still holding up to okay. And then in terms of the tariff and the like, because of the pause, we haven't seen the significant impact. And what's also important, a lot of big companies that reported have said that they're not going to put the prices higher. So there's still a bit of a flush at the moment with the economy, but it's just tracking okay at the moment. So there's no rate cut to really support it at this point.
What do you like in China at the moment?
Oh, actually, I do think that China, in terms of the services and consumers, does look pretty strong. And so far, we've seen the latest reporting.
Is it all milk tea and Labubu, though?
Yeah, that's right. Look, I actually think they even some of the discretionary that they have done reported very, very strong numbers. Maybe partly because of the numbers, expectations was too low. But I think the consumer-focused businesses are going to do much better than expected. Now, with other parts of the economy, we're just a little bit cautious because, the housing, the start-stop sort of now showing a bit of weakness. The latest around the stimulus is not yet to take effect. And then most of the expectation is second half there will be further slowdown. And because of this pull forward in a lot of those activity, net, the tariff on China is still pretty high. It's 30%. So on average, so we think there is slowdown coming, but focus on the consumer. That's where the government is targeting.
Outside of China, are there other areas of emerging Asia that you're looking at? Because we've got EM stocks doing their best since October. EM currencies having a moment as well. In this environment of US dollar weakness, is this something you're taking a look at?
Absolutely. Look, I think, having based in Australia, we actually think Australia is looking incredibly interesting. We actually have been outperforming massively, partly because of the US dollar weakness. We actually have an incredible amount of buying into our market, just as one is the institution allocating money away from the US into the Asia, not so much immersion, but into Asia, and also the essentially purchase of currency. That's why our banks continue to be pushed higher, in the environment where there's still a lot of uncertainty. So, I think the Australian market looks really good. We're somewhat insulated from the tariff, and our rate cut cycle just started, and our company is not awfully expensive.
Jinbei, always a pleasure to have you with us. Jinbei Liu, who's a lead portfolio manager at TenCap. And we continue to watch the speech that's been given by Bank of Japan Governor Ueda there. He's been speaking about the sort of ongoing challenge when it comes to that 2% inflation target. He's speaking in Tokyo at the moment at an international conference, talking about how there's no perfect data to capture underlying inflation data at the moment, and that they're closer to the target, though, that at any time they've been during the past 3 decades. And we do know that the Bank of Japan has been moving closer and closer, particularly in its quest towards normalisation. What's really interesting is that we're seeing this big response when it comes to bond yields, right? The 40-year yield falling 10 basis points, the 30-year yield also falling 10 basis points in trading at the moment, and we're looking at that reaction as we get a way to continue to speak. And of course, a real test of investor appetite and market nerves coming up with that big JGB auction tomorrow, Paul.
Well, let's take a look at how some other stocks are moving at the moment. We are, of course, keeping an eye on Nippon Steel. We saw a little bit of a bump yesterday regards, what President Trump's calling a partnership between the two, stopping short of describing that as a full takeover. Perhaps reality, to a degree, setting in here. According to S&P, the US steel deal is going to severely pressure Nippon Steel. There are a number of aging assets in the US which are going to require a fair bit of investment. Analysts warning that the scale of that deal and additional investments are not really positive for Nippon Steel's earnings in the short term. We're also keeping an eye on 7 & I Holdings. You see slightly weaker there in the early going in Tokyo. It is 7 & I's AGM today. Not really expecting any discussion on the Couche-Tard bid, though. Not going to be any questions from shareholders either. This is the first meeting for the new CEO, Stephen Dacos, as well. We have more ahead on the Asia trade. This is Bloomberg.
Top trade officials from the European Union and China are planning to meet again early next month. It's a sign that both sides are stepping up engagements as they try to push back against US tariff pressure. Let's bring our China correspondent Min Min Lo. So it's very interesting that even as the sort of US-EU détente continues, there's clearly alliances being forged. Do we know what will be discussed?
Well, very little is being disclosed publicly for now, but we know that this is coming ahead of EU officials traveling to China in July, also ahead of that July 9th deadline when the US is looking to potentially raise tariffs on EU goods from 20 to 50%. So it looks like this is an opportunity for both sides to find out what their stand is in terms of how they will deal with the US. And this is despite those US threats to the EU not to lean too closely towards China China, it looks like the EU is still playing this balancing act here, because this is the third time that EU and Chinese officials going to engage publicly. The European Trade Commissioner, one of the trade representatives, traveled to Beijing in March. That was followed by a video call in April, and this time you have the Chinese Commerce Minister Wang Wentao traveling to Paris to meet with his European counterpart on the sidelines of the WTO meeting. So whether or not this will lead to some, or at least pave the way for some sort of concrete deliverables in July when those EU officials travel to Beijing, that is something we want to look out for, whether they will continue to perhaps look into picking up discussion of an investment pact that had been put on hold for many years, or perhaps lowering tariffs on Chinese EVs. These are, of course, things to look out for, and whether they will look to deepen trade cooperation as well as both sides counter those impact of US tariffs.
Yeah, and manufacturing strength remaining a theme in China as well. Tell us a little bit about this new version of the Made in China plan that Beijing is said to be preparing.
Yeah, so China first introduced the Made in China plan in 2015. It was a 10-year plan that's supposed to sort of expire by 2025. And we understand that policymakers are now looking at a new iteration of this plan, a decade-long sort of blueprint to map out China's manufacturing capabilities over the next 10 years. And once again, it is expected to focus on high-tech manufacturing, especially things like chip-making gears, given those curbs from the U.S. and how that has threatened China's national security. Here you can see in the pie chart that manufacturing has remained a pretty big part of China's share of GDP, and we understand from policymakers that they plan to keep that share of GDP contributed by manufacturing stable in the mid to long term. And again, this doesn't seem to, address that criticism from the U.S. of the trade imbalance, because that concentration in manufacturing has been one of the key drivers of that imbalance. And this is despite as well Chinese policymakers acknowledging that they need to boost domestic consumption. We know there is this ongoing debate among policymakers as to whether to place a target on how much consumption should contribute as a share of GDP. But according to sources, policymakers are still leaning against putting a target there because they're unsure whether they have enough policy tools to really ramp up consumption in a big way.
The PBOC has also strengthened requirements for banks to step up yuan transactions. So what does this tell us when it comes to currency policy priorities for Beijing?
Yeah, so the PBOC has asked major lenders to step up yuan cross-border trade transactions from 25 to 40%. So back in 2024, the total yuan transactions was about 30%, according to the PBOC governor. So this shows you China's determination to really ramp up the pace of the adoption of yuan in global transactions, which has increased over the past years. But it's still, if you look at the global share of yuan in SWIFT payments, it's only 3.5% for now. And this comes as there has been some concerns about the attractiveness of dollar assets. And of course, this increased requirement from the Chinese banks, it will likely increase the demand for the yuan as well. And this comes as the yuan has strengthened about 2% or so far against the dollar this year.
All right, Bloomberg's China correspondent Min Min Lo there. Well, China's Premier Li Qiang says China's aiming to strengthen cooperation with Southeast Asian and Gulf nations as he meets with leaders at the ASEAN summit in Malaysia. Bloomberg's Avril Hong is in Kuala Lumpur for us. So, Avril, tell us about some of the areas of cooperation that we might see.
Yeah, Paul, I mean, this is day 2 of the ASEAN summit in Kuala Lumpur, and the big event is still going to be that ASEAN GCC China summit that takes place this afternoon. We've already been hearing from the Chinese Premier Li Qiang and how China is really looking forward to cooperating with the GCC and the ASEAN countries, that they're willing to step up positive contributions in order to uphold the interests of the global south. So a sign of the times, really, I think. It's also worth highlighting that when it comes to the Chinese delegation, up until yesterday evening, we weren't quite sure who was going to be part of the entourage along with China's number 2, Li Qiang. And our reporter Josh Xiao actually spotted the Chinese Commerce Minister Wang Wentao and the PBOC Governor Pang Gongsheng. So a really strong lineup and showing here the commitment from China to the region. To your question about areas of cooperation, we've already heard that this could include infrastructure, potentially projects when it comes to energy as well. But of course, this all comes with challenges. ASEAN and GCC's first summit was actually just last year. So now China is in the mix. As I said, this is the first time this trilat is going to be taking place. Thus, this break from the bilateral format potentially complicate things when it comes to agenda setting, when it comes to achievable outcomes as well.
We're also seeing Emmanuel Macron in the region as well. All sorts of alliances being struck here with Vietnam.
Yeah, Macron in Vietnam. A day ago, I was just discussing with you guys about how energy as well as transport industries could be in the mix as areas of cooperation. We're since hearing that defense is also part of the engagement between Vietnam and France with the signing of framework agreements for defense projects. Also hearing how France is pledging support for sectors in Vietnam, including high-speed rail. So all in, France and Vietnam drawing closer in terms of ties. And certainly this is against the backdrop of potentially their exports getting hit from Trump's tariffs. Macron is making this multi-stop tour of Southeast Asia. After this, he goes on to Indonesia, and then he sort of ends the week in Singapore. He's not the only leader to be making similar trips to the region. We've seen these from the Chinese, Spanish, Japanese sides as well. So certainly, Southeast Asia is in the spotlight.
Bloomberg's Avril Hong there at the ASEAN Summit in Kuala Lumpur. And we do have more ahead here in the Asia trade. This is Bloomberg.
We'll be watching shares of Meituan at the open in Hong Kong. The Chinese food delivery giant beat on earnings expectations, but did warn the profitability could take a hit from intensifying competition. Let's get more on this from our tech reporter, Annabelle Drewers. So, Belle, what stood out in the earnings call?
Yeah, I think, Paul, to your point there, I think really the big focus was that intensifying competition and also the dent that it could mean for profitability in the shorter term, because Meituan is a business that has some very global ambitions. So they've already expanded, for instance, into the Middle East. They're here in Hong Kong. Now they're looking even further afield, and they're planning to spend billions of dollars in that effort. So Brazil is going to be the next country that they're setting their targets on. So that's really the bigger goal of the business, to go global. But we heard during the earnings call the CEO, Wang Xing, warning that there is going to be a shorter-term impact to profitability. They're saying as well their local commerce operations could decelerate in the second quarter, and operating profit as well could fall significantly. But as you said, actually we saw sales and net income coming in better than expected for the first quarter. Sales up around 18% to $12 billion, and net income as well at $1.4 billion. So some challenges ahead, but still first quarter numbers relatively bright. That's the share performance over this year. I mean, they're down 15% year to date.
Xiaomi's up next. What are we expecting here?
Yeah, well, I think just to, again, make that comparison from Meituan off this year to what Xiaomi has done, it's been really a stellar run. The stock has traded up significantly, moving really from the second half of last year into the first quarter of this year. So gains of around 50% just year to date. Very high expectations going into these figures. We did as well have Lei Jun, the chairman and founder of the business, unveiling the suite of new products last week. So a new EV, for instance, they're getting in, or they're ramping up production of their smartphone processor. So in terms of what's going to be most interesting to watch, smartphones still expected to be more than 50% of the revenue, but EVs, you can see they're really starting to add more and more to the bottom line. Overall, though, again, as I said, high expectations, predictions of around a 45% jump in revenue for the period.
All right, tech reporter Annabelle Drill is there. Let's get to some other stories that we're following. The European Union has agreed to speed up trade talks with the US. That's just days after President Trump criticised the group for slow-playing negotiations and taking advantage of the US. The European Commission spokeswoman says there is new impetus for talks after Trump extended the deadline for 50% tariffs on the EU. Meanwhile, ECB President Christine Lagarde says Trump's erratic policies present a prime opportunity to boost the euro's international role.
Moments of change can also be moments of opportunity. The ongoing changes create the opening for a global euro moment. And this is a prime opportunity for Europe to take greater control of its own destiny. But let's not fool ourselves. It is not a privilege that will be bestowed upon us.
Well, let's take a look at how futures for Europe are opening. We're seeing a little bit of strength there for the euro. However, DAX futures, Euro Stocks futures looking just a little bit softer at the moment, notwithstanding that there is a degree of optimism right now around the potential for the EU and the US to, well, they're at least talking, maybe reach a deal by July 9th, although 6 weeks, not very long, Heidi.
Yeah, we are seeing at the moment when it comes to how Japanese assets are processing this, particularly when it comes to the bond market. We're seeing both the 30 and the 40-year yield falling 10 basis points there. These gains being extended as we continue to hear from the Bank of Japan Governor Kazuo Ueda saying that the bank will continue to adjust the degree of its monetary policy easing as needed if authorities gain more confidence that the economy will improve in line with their view. He has been talking about the grappling of the challenge of 2% inflation and how they've been closer than they have been over the past 3 decades of course, persistent deflation. Ueda saying that the BOJ expects underlying price pressures to gradually move towards that 2% target by the second half of the outlook period, but that it's important to judge if the outlook will be realised without preconceptions. He's speaking at an BOJ International Conference in Tokyo at the moment. Taking a look at the yen in terms of the past 2 days, this is a picture, and of course, so much of this comes down to what we're seeing with the dollar as well, that weakness that we continue to see persisting with the greenback, and sort of that 140 handle is very much a comfortable level that we're seeing for the yen at the moment, given the lack of momentum that we see in dollar upside. This is Bloomberg. Take a look at how we're tracking across major markets here in Asia, as we're just about half an hour into the start of trading here. Of course, a little bit of upside when it comes to those trading in US futures, that as we've gotten a little bit more positivity in the trade narrative, right? The EU saying that they want a fast track of these EU-US trade talks. We're seeing that gain in the yen, though, really being a dominant feature when it comes to FX trading with the weakness in the dollar. Nikkei 225 off by about 0.25%. We're continuing to hear from Governor Ueda, talking really about the idea of flexibility and potentially returning more hikes to the menu depending on how that inflation battle plays out. The Kospi also down by about 0.4%. A little bit of upside for Australian equities, although we're off sort of session highs, if you will. Also watching New Zealand with the RBNZ decision expected to deliver a 6th rate cut today and potentially more signalling of more supportive measures and cuts to follow, Paul.
Let's get to some other stories that we're following. German Chancellor Friedrich Merz says Ukraine has been given permission to use weapons given by its allies to strike deep inside Russia. Ukrainian President Volodymyr Zelensky has long appealed for this authorization, which has gained traction with Russia's latest barrage of drone attacks and President Putin's refusal to engage in serious talks. The Kremlin has brushed aside criticism of its drone campaign, calling President Trump's latest comments an emotional reaction. Trump on Sunday said he was considering new sanctions and called Putin absolutely crazy for needlessly killing people with his escalating attacks. NATO Secretary General Mark Rutte says the alliance will look to adopt a higher defence spending target of 5%, meeting a demand from President Trump that was once seen as unrealistic. The proposal includes a 3.5% target for hard defence spending and another 1.5% for related outlays. The Dutch government has said that Trump plans to attend a NATO summit next month in The Hague. Major power companies in Singapore, Malaysia and Vietnam have agreed to explore renewable energy links, especially wind power, across their borders. The agreement is seen as a critical step for the region to meet ambitious climate targets while supplying growing demand in sectors like AI and data centres. The pact was announced on the sidelines of the ASEAN summit in Kuala Lumpur. Let's take a look at how commodities are tracking at the moment. Iron ore's giving up a little bit of ground. It's slipping again, now $96.70 a tonne, although copper showing a pretty modest gain there. Risk appetite has improved somewhat since President Trump agreed with the EU to extend the deadline on reaching a trade agreement to July 9. There appears to be a little bit of encouragement on that front, although that is only 6 weeks away, so the deadline remaining fairly tight. That news had initially prompted oil prices to move a little bit higher, giving up some of those gains at the moment, though. We see Brent crude there, 64.63 a barrel. We do, of course, have an OPEC Plus meeting coming up. That's been rescheduled to May 31. No real reason for that other than a scheduling conflict among some members, so we'll get a decision on that day. Momentum, though, does seem to be building towards an output increase for the month of July. Looks like OPEC remains committed to punishing those production cheats. If that production increase goes ahead, Heidi, it's going to be the third in a row.
It's sort of really challenging times for some of these energy policymakers as well, right? Because the demand side is just so questionable still with all of the tariff-related volatility and the to and fro when it comes to trade negotiations, but also the supply side. A lot of the geopolitical implications are still in place as well. And at the moment, we are really watching President Trump apparently eyeing sanctions against Moscow this week. This growing frustration against President Putin's continued attacks in Ukraine. So we're watching for how that plays out as well in terms of implications for global energy markets as well. Take a look at what we're watching when it comes to Japanese bonds at the moment, really extending gains as we continue to hear from Governor Ueda speaking at the BOJ's international conference taking place in Tokyo this morning. He's saying that they will adjust easing if needed, if the economy improves as expected, so that degree of monetary easing will be adjusted if there's more confidence that the economy and the data comes in line with their view. They do expect underlying inflation to gradually move towards that 2% target at the second half of the outlook period. And he's talking about the need to kind of judge if the outlook will be realised without any kind of preconceptions, so really alluding to some of the uncertainties globally that we see.
Right, let's get the latest from the corporate front. We are tracking Country Garden and its push to win backing for a $14 billion offshore restructuring. Seems to be running into some resistance from lenders, though. The key group of banks say the Chinese developer hasn't yet agreed to demands related to the return of seized collateral, and that would be a deal breaker. The bank creditors are vital to Country Garden's restructuring plans as they can block any potential deal. Well, BYD's sweeping price cuts of as much as 34% sent Chinese EV stocks tumbling in Hong Kong as concern grows over a renewed price war. The price cuts are expected to push BYD's rivals to also cut their prices, straining bottom lines. Let's bring in our EV supply chain reporter Danny Lina for more. So, Danny, how well placed is BYD and other Chinese EV makers to engage in a price war?
Well, BYD has a first mover advantage by its sheer size, dominating the marketplace and having a huge grip on sales in the world's biggest auto and EV market. And we saw BYD taking out the playbook once again to shake up the market and really slash prices. Prices being cut by 34% over last week. And therefore, we saw that market reaction, that saw BYD's own shares fall almost 9%, wiping off $13 billion off its market cap, and the broader sector there also falling as well. And it really adds to just fears across the sector of not just BYD's largesse, but the fact that they're all having to respond to BYD's price cuts across the entire lineup, effectively, or 22 models that BYD produces. And when you look at kind of how healthy the sector is, at the back end of last year, inventories of EVs rose to 57 days, and that's quite a high in the most recent period. So therefore, it is going to be a challenge as automakers look to offload stock and to try and compete by having to cut prices.
Yeah, Danny, do we know who we expect to be kind of the hardest hit by this change?
I mean, every automaker seems to be hit no matter how big or how small. We've seen various rivals of BYD from Leapmotor to Geely, all having to reflect and respond to its major competitor in following through with similar price cuts which are not necessarily as large as BYD, but still the fact that this will eat into margins, and as we've seen many automakers recover from a prior set of price wars over the recent period and recent years, this is a little bit of bad news for the industry as they've been trying to grapple with this transition and, generally speaking, have performed very well compared to peers outside of China.
Our EV supply chain reporter Danny Lee there. More ahead on the Asia trade. This is Bloomberg. Australia's Productivity Commission has identified 15 priority reforms needed to boost economic efficiency and raise living standards. The Commission is seeking input on sectors including corporate tax, carbon targets, energy infrastructure. It says that productivity growth is at its lowest ebb in 60 years, with GDP per capita rising only 7.7% over the past decade. That's leading to calls for a renewed reform agenda after the Albanese government's landslide election win saw it return to office with a vastly increased majority. Joining us now is Alex Robson, Deputy Chair of Australia's Productivity Commission, that came out with this report and is working ongoing on these recommendations. Alex, really great to have you with us. So we've seen, all of the signs that have been building up for the past, decade really or more, right? But we're seeing living standards really flatline. We're seeing real wages really failing to make any traction for about 6 years now. What do you think are the key priorities that the government should be focusing on in terms of implementation to be able to steer this idea of a lost decade around?
Yeah, so the government, thanks for asking me to join the interview, Heidi. The government has asked the Productivity Commission to look at 5 broad areas. Skills and adaptable workforce is one of them. Dynamic and resilient economy is another. The care economy, which is becoming an increasingly important part of Australia's economy and efficiency in that sector. The transition to net zero, and then, of course, data and digital is another key area for where we're looking for productivity improvements. So those are the 5 areas, and the priority areas that have been identified are in some work that we released last week, and we'll be looking for input from stakeholders and all Australians on those areas for improvement in productivity across the board.
What does the labour market tell you, though, about the dynamics? Because so much reliance has been on to try and get productivity growth from immigration. Does that continue to be an area of importance, do you think, despite, of course, coming with its own challenges, spreading to the likes of the property sector, for example?
Yeah, so we're not looking specifically at migration settings in this inquiry. We have looked at that before, and there has been some reforms put in by government. But it's suffice to say migration settings, and particularly the composition of Australia's skilled migration policies, are a key factor in productivity, but it's one of many factors. The key for Australia in the last decade has been there's no real silver bullet to productivity performance and improving that performance. We put out a report a couple of years ago identifying 71 possible recommendations across 39 areas, and that tells you that, look, there's no single thing you can point to, such as migration or anything else, that would tell you that, oh, well, that's where you need to focus on. It's a range of areas that you need to focus on, and that's what we're looking at in these 5 inquiries.
Alex, as Heidi mentioned there, the Albanese government's been re-elected with an enormous majority, but it didn't go to the election campaigning on reform. So is the political will there to adopt some of these reforms you're talking about, and what are the consequences if they don't?
Well, I'm not going to comment on government policy and the election. We were given this inquiry in December by the government. We've been working away at it. We asked Australians for their ideas in a productivity pitch earlier in the year, and we got more than 500 responses to that. We've called for the submissions recently last week. So we're keen to hear from all Australians about ways in which to improve productivity. We'll do our own analysis and then give an interim reports to government in the middle of the year, and then final reports to government at the end of the year.
You also had some thoughts on generative AI as well and its potential to ignite productivity. It also has the potential to put a lot of people out of work as well. So how do you predict potential outcomes around the use of AI?
Yeah, so, I mean, we think Australia is a services-based economy. 80% of GDP is in services, so that's everything except agriculture, mining and manufacturing. 90% of employment is in services, and the promise of AI is in terms of productivity performance, is really in terms of those services sectors. So we think that there is a big upside to productivity gains due to AI. The key is to get the regulation settings right, and we're interested in hearing from Australians about those regulatory issues, and also we're also interested in hearing about ways in which access to data can be improved, because data is one of the key inputs into the performance of AI and its improvements over time.
How much have we seen really the masking of this ongoing productivity problem as a result of sort of, you know, the good data coming through still from our commodities exports, right? And does that mean the sort of energy transition, clean energy space is low-hanging fruit when it comes to being able to boost productivity?
Well, during COVID, our productivity performance actually increased, and that was a bit of a measurement issue and a bit of an anomaly. We call it the productivity bubble, as certain industries that had relatively low levels of productivity were shut down and then opened up again. So over that decade that you spoke about, Haidi, there has been this bubble during the middle of COVID, and that might have provided some false sense of security to governments that, well, productivity was increasing and therefore it's not a problem, but actually now it's come back down and it's at the level it was in 2016. So there are industries you can point to that say, you know, you can say, well, you know, productivity might be doing well in those sectors, but overall in Australia it hasn't been a great performance over the last decade.
Well, no, the last 6 decades, according to your report as well. You say productivity's been stagnating now for 60 years. I mean, how did we get here?
Well, it's not quite right, Paul. So what we say is that the last decade has been the worst performance in 60 years. So during the 80s and 90s, actually, Australia's productivity performance was, in terms of growth, was very good. And the concern is over the last decade, it hasn't been that good. And that's due to you know, a lack of reform, and we've recommended reforms, and we'll continue to do so with this latest inquiry and make recommendations to government.
You know, as I think Paul alluded to, a 3-year government term is not exactly conducive to making sometimes unpopular reforms that might only pay dividends decades down the track, right? With that being the reality, do you think there needs to be more focus in garnering support from the private sector, given that corporate leaders and private sector leaders have been most vocal about the need for these reforms?
I'm not quite. I don't quite agree with you, Haidi, that the 3-year terms is necessarily an issue. We've had 3-year terms in Australia at the federal level for decades, and we had significant reforms, you know, in terms of floating the dollar, freeing up capital markets, product market reform, labour market reform, with 3-year terms. So I'm not sure that's something you can point to as a barrier to reform. I think it's identifying those reforms and then getting the conditions right and implementing them in the right way that is an issue in Australia more recently, and the fact that there's no silver bullets. Productivity gains and securing those gains in an era where services economy dominates is it's hard. It's not easy, and that needs to be explained to people and implemented well by government. So those are the challenges that we face. In terms of the private sector, look, productivity growth has got to come from the private sector, and so that's, you know, all businesses across Australia have got to find ways in which to you know, improve their productivity, whether that's by investment or putting workers and capital together in more efficient ways, educating workers on the job. All of those things, those are the things that are those are the things we're looking at in these inquiries.
How big a role will something like significant tax reform play in the broader productivity picture here?
Well, we've asked for people's input on that, in particular on corporate tax reform. And the reason we're interested in that is because in a dynamic economy, investment is important and capital deepening is important for securing productivity growth. And investment as a share of GDP in Australia has been declining and is at very low levels historically. And one of the key policy levers in improving investment is corporate tax. And so we are looking at that issue quite closely. And so I think it's very important, along with a range of other factors, including the burden of regulation, duplication and overlap and those sorts of issues. But corporate tax reform is a key issue that we're looking at.
Just referring back to Heidi's earlier point about the need for some policy consistency over a long period of time, would it be your hope that your recommendations get accepted by other parties in Australia as well?
We make recommendations to government. That's our job, and we hope that they're implemented by governments. And so whether they're supported by others, I mean, we seek broad support across the community, but ultimately we make recommendations to government. And we hope that they're implemented by the government of the day.
It's interesting looking at the global rankings on productivity, and I think last year Australia came in around 13th, which, you know, was actually a move up. But if you take a look at the countries that are consistently in the top echelons, the likes of Singapore, Switzerland, for example, are there lessons learned from some of their models, do you think?
It's hard to get general lessons from other OECD countries or indeed countries like Singapore because the economies are so different. So as the Australian economy is very different from those economies, I think, you know, the key is to have broad productivity enhancing policies in place, and what those look like across different countries can be very different. And so that's why we're looking at these 5 broad areas. We do take lessons from other countries if there's obvious ones that are available, but some of them are not so obvious and some of them are very country specific. But I think the broad lesson across economies is that you want productivity enhancing policies, things like appropriate regulation, good tax settings, good labour market settings, good product market settings. But there's always lessons to be learned from other countries about what to do and importantly, what not to do in different circumstances.
Alex Robson, really great to have you with us, and best of luck with the rest of those reform recommendations. He's a Deputy Chair at Australia's Productivity Commission. We do have more on Australia Ahead every Tuesday at 10:40 a.m. if you're watching here in Sydney, 8:40 a.m. if you're watching out of Hong Kong. You can also tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find it on Apple, Spotify or Bloomberg.com. More ahead on the Asia trade. This is Bloomberg.
Moments of change can also be moments of opportunity. The ongoing changes create the opening for a global Euro moment. And this is a prime opportunity for Europe to take greater control of its own destiny. But let's not fool ourselves. It is not a privilege that will be bestowed upon us.
ECB President Christine Lagarde on the opportunity that she sees to boost the common currency's profile. We're seeing certainly that boost when it comes to the euro trading against the US dollar so far in this session. And of course, that has been down to quite a bit of weakness that we continue to see in the greenback as well. That relative strength index, if you want to take a look at momentum for the US dollar, is the weakest in 7 years, the weakest since about 2018 at the moment. So that vulnerability in the dollar has been really quite interesting as it plays out against some of the these other currencies as well. The Bloomberg dollar index is off by about 0.1%. Also watching dollar China as we've had some of the sort of policy tweaks for the PBOC's cross-border yuan push as well. We have seen, of course, a revival of that made in China strategy as well.
We've been hearing from the Bank of Japan Governor Ueda as well this morning. He says he expects the price trend to continue rising to target both upside and downside risks for the BOJ's view, and they stand ready to adjust easing if the economy improves as expected. The yen moved a little bit on those remarks. Right now 142.33. We've seen a little bit of action for Japanese bonds as well. Yields on the ultra long end have been easing off a little. Stocks meanwhile kind of flat. Heidi.
Yeah, take a look at what we're watching when it comes to Hong Kong and the China Open as we get into the next hour. It'll be really earnings heavy, right? Xiaomi will be one to watch, that peer-beating rally, setting a very high bar ahead of those earnings. We're watching Meituan as well with that sort of mixed picture of upbeat results, but also a bit of a cloud coming from increasing competition. A couple of the stocks to watch in the session today. This is Bloomberg.